Here to discuss the quarter, Citi analyst Ron Josey. He's got a buy rating on the stock, a 385 price target on the name. 385, I think, correct me if I'm wrong, gets us back up to the all-time high for shares of Meta. So that's where you see the stock going within the next 12 months.
Melissa, I do. I mean, the bottom line is, and I was just listening to what you and David were talking about in terms of the broader advertising environment. I mean, look, it's certainly improving. I think online is seeing greater gains than more traditional formats of advertising. And from a Meta perspective, what makes it so exciting is not only are we seeing accelerating growth, we're looking for 21% growth in advertising in 3Q, which is we haven't seen that in a long time, but we're seeing greater profitability too. So you've gotten a compound effect of both improving growth rates, better profitability, and frankly, when we do our work and we look to see what's driving these growth rates, it's not just advertising improving, it's actually just it's the investments they're making. So it's not a rising tide scenario in our view. It's very specific to those platforms that have invested in their ad tools that are attracting advertisers back to the platform.
Things in the past that would have really dinged the stock, Ronald, that have happened this quarter. CapEx will grow in 2024 versus the small decline in 2023. So it'll increase. Operating losses in Reality Labs will grow. Those are things that in the past shareholders would have picked apart. What specifically, in your view, is giving Meta the free pass this time?
Yeah, I mean, look, I don't disagree. If there's any hair, it's the unknown around potential increase in OPEX next year, and we just talked about CapEx. However, I thought management did a very good job of highlighting the year of efficiency is not a year. It is a continued mindset at Meta going forward. And frankly, if you're seeing greater growth opportunities and the results with advertising accelerating, you should be investing in your business. So frankly, I think we walked away from the quarter saying, all right, 2024, we'll see increase in operating expenses, which makes sense, given the growth. We're seeing an increase in CapEx. And if everything we hear and know and believe is true about Gen AI and maybe what Meta's doing with their Llama 2 approach, then they should be investing in greater CapEx because the opportunities are pretty great, right? You can imagine every SMB potentially talking with a person via agents or bots. And so there's a lot of upside and potential here. And as long as the numbers are there and we're seeing profitability, I actually think that's okay.
So you're okay with the spending on the metaverse? I mean, what are they, 38 billion in losses so far? I don't even know where they end up on this number.
At the very least, David, at least we know that in our view, they're ring-fencing the investments in Metaverse. That's, in our view, a pretty long-term opportunity and more in the here and now. It's about Gen AI. It's about greater engagement. It's about launching newer apps, things along those lines. And so the Metaverse is a 5-10+ year opportunity, clearly very invested. And if they didn't invest there, we'd see a lot more profitability, no doubt about that. But in this case, it seems as if they're able to do both at this point.
Yeah. Let's talk about the stock a bit more. I mean, I had one investor, obviously, who's quite bullish, say they could do as much as $20 a share in earnings next year. I don't know where you are on that number. I just saw you, but you put a multiple. They're still trading it's still trading below the market multiple, this stock, right?
I mean that's what makes Meta our top pick, to be honest. We're at close to $17.60 next year for 24. There's probably upside there. It's very hard to understand when you go through two rifts whereby 1 in 4 folks are no longer there. And you're growing revenue. The opportunity is certainly there to get to higher than where the street consensus is for sure. And then you have a multiple that's not stretched. And so you get back to David and Melissa, your question earlier, where does the stock go? Our 385 price target, if all of a sudden EPS is better and revenues are continue to improve, I think that's pretty interesting. And that's why Meta's, our top pick overall across the internet sector.